The next session is a solo presentation by Angus Brown. Angus is the CEO of CentB. He's a financial entrepreneur and is the founder and CEO of CentB, a global blockchain payments company based in South Africa. He is one of the founding team and later CEO of South Africa's first bank-backed digital currency and rewards program, ebucks.com, in 2000. After leaving South Africa's leading banks, first round after 11 years, he was the head of Alliance Banking and CIO at Mercantile Bank Limited for 4 years. Angus, the floor is yours. 20 minutes, please.
Thank you. Just checking. Yep, the microphone seems to be on. Can I just see if we can run the video now? I know that you guys have been around and watching and sitting still, so I think we're going to get the video up for a second. This is a 3-minute slice. Thank you. Glad to see the video worked out nicely. It's always a bit of a nervous moment. Is it actually going to play? Is it actually going to work? So they say that a picture says 1,000 words. Well, I've had moving pictures, so does that mean I don't have to say anything more? Is it all over? I'd like to share with you just a little bit of our story about what happened, what have we been doing for the last little while, and I think with that context, it gives me the ability to maybe short-circuit some of the slides and to talk also about the challenges and the problems as well. I think we often gloss over the problems and the issues and the real concerns and sometimes just go on to the wonderful world that FinTech enables us to have. But I'd also like to pause around and deal with some of the challenges that we have experienced and the challenges that do exist. And I'd like to take questions. I've noticed from the previous panel, the moderators are really good at posing tough questions. So without a moderator, you are my tough questions out there. So take notes about anything that you see that you want to ask me about, and I'll grab some questions at the end. Basically, Minute Money is an African company. It's established by Africans for Africans, particularly to help them with a gnarly problem, which is about how do they get money back home. A lot of Africans are diaspora. They are in a different country that they're born in. You're seeing it inside this room. You see it in many different places in South Africa. We have about 5 million people in the country who are from a foreign country, from neighboring countries, and from quite far afield. That's a large proportion of the population. You see it here in London, you see it in America, you see it in all different countries, and they are challenged. They are often good earners, but they often have quite a challenge in their financial inclusion. So we saw this as one of the particular cases where people have problems, and we said, how can we actually help them with this? So we provide a service to help people get money home fast and easy. Although FINTECH itself was founded back in 2016 and went live in 2017 as a digital wallet, you saw some of the things up there that we do. We had a specific idea. Let's go and build a standalone app. In December 2019, we took it live just before the whole COVID crisis. And this app is a process app. It's about helping people get cash in and get money straight out. Really, really simple little problem. Put it together and said, let's see what we can do here. It's a remittance app. The key elements to me, from my background in payments and particularly in consumer finance, is that it's got to be really easy. People must be able to download the app quickly, do everything within 5 minutes on the phone. You don't need to have to go into a branch. You don't have to sign papers. It's got to be a very simple app, like a WhatsApp experience. Pretty much everything we've built in FINTECH and in Minute Money is designed from that WhatsApp experience. Is it as simple and easy to use? That's my threshold for experience in it. Then it needs to be accessible. That's only the first step to make it easy to use. It has to be where I am. So it needs to be where my cash is at. So the first integration we did was with a retailer network that is over 100,000. They say they're just under 200,000 lanes or retailers that you can take cash in. So you walk in there with your cash, drop it in, and it immediately reflects into the app. So I needed to have a cash solution, and it needed to be where people are. And that includes deep rural township areas as well. It's not just your sophisticated environments. You actually need to get into township environments as well. We then added the capabilities to do it from your bank account, recognizing that although these senders are challenged, they're not unbanked. Quite a lot of them do actually have bank accounts. They might not be banking all their cash in their bank accounts, but they do have bank accounts. So we needed to add that as a capability. We have added it. We see it's about 13% of our customers use the in-app banking load. Cash is still extremely popular as a mechanism to get money in. And then obviously at the cost is important. These are people who work really hard for their money, and they need to be able to make sure they keep as much of their money and they get as much of it at the other side as possible, and obviously paperwork. I think quite a few other people have spoken about the remittance market here. I don't know if there's anyone in this room who doesn't know half of these stats themselves or have created and contributed these stats. So important points, it's a pre-existing need. It's extremely high volume of frequency and value. And in many countries, it is the primary, or at least in the top 3 sources of income earner for that country. So if you're blessed with oil, then maybe you've got oil as your primary income, but a lot of countries you are blessed with your diaspora. That's the people who bring money into your country. They gift money back home, they work, they labor, they bring money back home. So remittances, particularly person-to-person remittances, are a really important liquidity source and driver of value for many countries across Africa. But it comes at a cost. it comes at a price that the banks have typically taken quite a big slice out of that for the privilege of servicing that. And they take it out in the beginning when the money comes in, they take it out on the way as the money gets transmitted, and they take it out on the final side, often charging fees when you actually withdraw your money or to hold your money on that side. So the financial system has not really enabled people very well. And that's what we were looking at inside SENTB and saying, how can we actually redesign some components of this to deliver better value for that? What we also looked at, and this is embarrassing personally, I was born in South Africa, and when I look at the list of the 20 most expensive countries to send money from, South Africa is on that list in 7 times in the top 20. So to Zimbabwe, to Mozambique, to Angola, all those sort of. So it's personally embarrassing to me that a sophisticated financial country, and I mean, I was working very closely, I was in a bank in South Africa, which was recognized as the most innovative bank in the world. Back in 2000, I was part of the founding team for the world's first bank-backed digital currency. We were innovative, yet how come we still are up there in the top 20, 7 times in the top 20? That's an embarrassing stat to me. We need to be able to fix that. I've spoken to the central bank, the various executives at the central bank, and they said, this has got to go. They've got to fix this. We have to drive down the cost to the consumer of remittances inside South Africa. So that's why I looked at working on this at home. Certainly, we all know that smartphones exist in Africa. I think Africa might be a little bit unusual in that it's a mobile-only market, largely. We've often said, digital, then there's digital markets, and then there are mobile also, and then there are mobile first, and there are mobile only. A lot of Africa that we're seeing is actually mobile only. This is the only computing device that they have. They don't really surf the web on it, they use basic functions on it, but the smartphones are there, the computing devices are there. So we've built mobile only. We don't have web versions, we don't solve anything like that. We just build for that. Our African context, of course, expensive. Another interesting context is volatility. And this does come into conversations when people talk to us about, blockchain, cryptocurrency, volatility, etc. We have yet to have a single customer say to us, I'm worried about the volatility of the actual asset underneath that. The customers don't have that question. Analysts and people in more sophisticated money, people who have investable money, tend to worry about that. But when you're talking about your cash, you're just about get the job done, make sure it gets done properly, make a promise, honor your promise. So the volatility is actually understood because your local currency is highly volatile in many cases. You also have mixed currency baskets. So, in Zimbabwe, you've got several different types of dollars. In Nigeria, how many different exchange rates are they operating with the US dollar and with the Naira? There's not just one exchange rate, there's different levels. And people have many different currency baskets. So where here in the UK, we might be very comfortable knowing there's the pound, and maybe there's this alternative currency across the channel, they're very used to multiple currencies. They work in multiple currencies in their head a lot. And then there's the sad part about documentation. Undocumented or badly documented is excluded. So unfortunately, there are financial crime rules that have unintended consequences. They are the right rules, often strangely applied, or with those unintended consequences that we look at. So if you've ever looked at a map of identity and lack of identity across the world, fortunately, Africa is a hotspot. There are many, many people who do not have proper forms of identity. We're not talking digital identity. We're talking identity. They actually don't have birth certificates, identity documents, national ID numbers. Passports are very rare in many places. So you have to think about that. And I'm not saying we've solved it. It's just one of the areas that we have to be considerate of the context here. What we do know, and this is why it's very exciting, is, from a financial perspective, is a low penetration of cards and POS terminals. In the city I live in Johannesburg, There's pretty much every restaurant I go to, I can pay with a card terminal. I go to the supermarket, there's a card terminal. I've been quite pleased here to use my bank card to tap onto the tube, just tap and go. It makes life very easy. It doesn't really work that way in much of Lagos, Accra, Addis Ababa. You might have some people banked. Whether those cards are usable is a different thing, which drives us into cash. So I certainly am a believer, and have been for a long time, a believer of how do we drive more of those transactions into a digital environment. And that doesn't mean you have to go and roll out POS terminals everywhere. It'd be nice if that was the case. There might be leapfrog opportunities for us as Africans. And of course, the interesting part is mobile money, how mobile money has just boomed. The number of mobile money accounts exceeds the number of bank accounts across Africa. And I don't think there's another continent or very many countries where that can be said to be there. There's reasons for it. Obviously, we've all looked at Safaricom and M-Pesa. We've looked at the areas it hasn't worked. But in general, what you're seeing is that mobile money is a basic bank account provided by a telco. It's a basic account, and it's important because it serves the needs as a basic account. So you have to think mobile money first. So you have to think mobile as the use case, and mobile money as the primary digital use case underneath that. We have been very fortunate to have experienced quite nice traction. So we started the business just at the beginning of 2020. It was a pilot, so we just marketed it on a very small basis, literally word-of-mouth marketing on that. The lockdowns that experienced in South Africa had a huge chilling effect on economic activity. You know, when people aren't allowed to leave their homes, they're not exactly going to go and spend money at the barber or the restaurant and generate income for what a lot of the diaspora are employed, self-employed in small businesses. So very, very chilling effect on transactional activities. As the lockdowns were released, what we saw is a nice growth coming into that. To explain that nice little bump, the channel that happened over there is we started off going into Nigeria. South Africa, Nigeria was the first channel. Unfortunately, in January this year, the Nigerian Central Bank published some changes in regulations, which I won't go into, but anyone who's Nigerian knows what's going on over there. And it effectively meant we had to suspend the channel. What do you do as a fintech? You go, okay, so my business just hit an absolute wall. You go around it. You think, hey, Ghana, Uganda, let's go and build a few more. So in 6 weeks, we'd integrated into Ghana, and we'd integrated into Uganda, and we'd actually able to launch. And that's what we did in March. And we were incredibly surprised by just how rich those channels were and how much they came up. So what happened in March is we launched into Ghana and Uganda. Over that period of time, we've added, 4 more countries into that space, and we've also added different payout modalities. So not just mobile money, but bank account, domiciliary accounts in Nigeria, and this month we actually launched cash, so that you can actually draw your money at cash, and towards the end part of this month, we'll launch cash in a couple more countries as well, so that you can take cash out the system. So you walk in with cash at a supermarket, 2 minutes later you walk out with cash in Senegal or Benin. And that's what gave us these nice increases. We tapped into that market. We're able to grow up to registered users are now just under 10,000. Probably while I'm here in the UK, we probably reached our 10,000 user. The volumes have been growing nicely as well. So that's the good news. That's the exciting part. Like, wow, we're actually seeing some traction. We're seeing some volume, we're seeing some excitement. But let's also look at the challenges and problems that exist as well. Because we're a consumer business. We've got phone calls, hundreds of phone calls a day. We've got a field force of people that goes out and talks to customers and gets customers in. Some consumer challenges, data for those smartphones. The smartphone might be there, but the data is expensive. So there's movements like fees must fall, data must fall, to try and actually bring down the price. Because it might be great to have a phone, but you're still got to get connectivity. And Wi-Fi is not widely accessible outside your home. So just need to be cognizant of that. Make sure your transactions are very, very fast and extremely light. You can't be moving images backwards and forwards. You need to think about, are you sending a K worth of data when your customer interacts with your app? Is pretty much your budget for that. It's also unreliable. Inside a lot of stores, you've got to think about how you're going to get through all those concrete. And it's not really a problem when someone's sitting at home, but if someone's using a phone in a till point, how are you able to give them something that they could use as a screenshot? And our system actually works offline in that the retailer is wired, but the customer might be offline at the time that they're in front of the retailer. So you need to have a solution that the phone is effectively dead or is a screenshot at that point. The phones themselves are also old. And when I say old, some of those phones are held together with duct tape. They are not your iPhone. We're actually seeing iPhones less than 5%. Huawei is big. We had to go into the Huawei store, not just the Android store, because Huawei have built their own environment over there. Lots of no-name phones, knockoff phones, Chinese phones that have been pushed into the market over there. Cheap phones. I mean, you can get a new phone for $50, and you get a second-hand phone for $30. So there's a lot of phones out there, but those phones might be old and clunky. So think about that in terms of what do you need for your app. Your designers might want to make a beautiful app, but that's not always going to work. Verifications. We do bank-grade customer verification when the customer is signed up, and we do that all on the phone. So we take video, selfies, all that sort of stuff, and a lot of those verifications fail. At first we thought, 5% of the verifications would fail. No. 60% of the verifications fail. You have to really think about how you're going to do KYC when your mobile systems are not actually reliably identifying customers. So you have to really think about what do you do in these cases? What's your manual process that is able to deliver a verification 5 minutes after the customer has registered and failed on your AI system? Because just because your manual doesn't give you any extra time, you have to be aware of that. The customers are impatient. Time is just as important to them. They expect to be registered and transacting within 5 or 6 minutes, including your manual process that has to scan it and look at it, while still maintaining the quality that a bank and a bank auditor will be able to look at those images and say, yes, there's a track record of everything that I needed to look at, and it's safely secured, and it's encrypted, and you've looked after the customer's data. You haven't left it anywhere it's not supposed to be. And those customers are also impatient. If that transaction, you promise minutes, it's the name on the box, and you don't deliver minutes, they start phoning you. We had one particular customer who phoned me 70 times. 70. It's like literally I'd answer the phone and he'd just put the phone down, answer again and answer again. It's like, where's my money? 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 I've had 3 children and he was more irritating than they were. It's just how it is because that money is important to them. That money is vital to them, and you recognize that, and you go, that's what you have to deliver. That money represents hours of somebody's life, and it's going back to look after your children back home. It's going to look after your granny back home. Your mom back home needs it. This is not just a service. Many years ago, when we were building eBucks, we looked at just how important is this. We realized money is life and death in many cases. It's not just a little thing on the side. Obviously, your 24/7 support, we get most of our calls after 8 o'clock at night. That's when our customers are transacting. What do you do when your support structure has to be built to work after 8 o'clock at night and over the weekends? That's your busy time. You have to think about these things because you're servicing and supporting customers. And your credibility obviously has to be very much driven by these people look at you and go, who are you? Where do you come from? Why can I trust you with my money? And that's also because, they're looking at the competitor is cash. The competitor is not another fintech. So I think this is almost my last slide, just talking about the regulatory sandbox. We have been in the South African regulatory sandbox for 6 months. We just recently graduated at the end of August out of that sandbox. Gave us a good opportunity to spend time with the regulator to really understand what they need. They need certain information. They need comfort that players of credibility are servicing and looking after people's money. We got some insight from them as well as to that. They got some insight and they managed to dispel some of the myths. Because obviously we use a blockchain underneath here. People go like, oh, what does that mean? What actually happens underneath it? So it gave us good engagement with the regulator on that. And the sandbox is not for an idea. A sandbox is for an actual running business that they want to see how it actually works in reality. Very interesting experience. I would strongly recommend if any of you are working on that, try and get close to regulators, get into the sandboxes. They give you a nice opportunity. Also, they give you an obligation in the back of your mind. Make sure that what you're doing is done properly, that you're documented, because if a regulator is working with you, expect them to be auditing what you're doing afterwards. It also helps you to understand what's their real objective. Often you look at, well, they just wanted to get a report. Why did they need that report? Try and understand that and try and figure out what's their actual drivers underneath that. So this is the team. I think I've mentioned the two CEOs, and this is the rest of the team members. Actually just quite a small little team. We've been quite light. It's self-funded for a while, raised some funding a little while earlier, looking for some more funding as we grow. We're looking to scale the business to keep supporting customers and to keep helping our customers. So on that note, I think I will drop in for any questions. Would you like to facilitate any questions? There's a mic at the back. Although we've got quite a small room, we could probably hear you clearly if you want. And the front.
I like you. Your presentation, your story is a very positive story, a kind of story that I like to support across Africa. A very close friend of mine, a leading fintech innovation company in the US, they're looking across Africa to look at 10 fintech companies with a revenue of $1 million, looking to raise 10 million plus. I don't know if there is any way that you might fall into that gap, and I can make introduction that can help add value into what you're doing. Thank you.
Well, thank you very much. It's a good thing to hear. That we are trying. We have our challenges, as I've been quite frank about that. And we think that that money that we're looking to raise, we can deploy for good. Obviously, we have shareholders. We'd like to make those shareholders happy and that sort of stuff. But we see the difference that we're making. Every day we get those phone calls, and we have a customer support team. I follow in and I listen into all of those calls, and I'm involved. We've got a nice CRM system that catches into that. And by doing that every day, I probably spend an hour listening into customer calls. And you're there to hang on, I think you're answering this one incorrectly. You might be misunderstanding the customer. Or when a customer's screaming, they scream. And you go, okay, why? Slow down. Like somebody will often, customer support will react back and say, but, don't blame us, we're not stealing your money, etc. Just calm down. The reason the customer's not shouting at you, they're upset because it's their money and it hasn't worked out. We might be fintech. We don't get this right all the time. We work with business partners who enable things, and sometimes systems go down. There isn't a payment system that doesn't occasionally have some sort of interruption, some sort of problem. The money gets to the other side, and it's blocked because there's a KYC requirement at Orange. And they say the person's received more than $3,000 this month. They need to go up to KYC. The customer says, why have you stopped my money? We haven't stopped it. Orange in Senegal has stopped the money. But we have to explain that and resolve it. But when we see those problems, it actually helps us to hear and to empathize with what those customers are going through. And it just keeps telling me just how we have to do this. We have to fix this and get this right. We've got to get our KYC right. We've got to get our customers on board. We've just got to be continuously doing this. Thank you. Are there other questions out there? There's a microphone here, and I think there's a microphone at the back. I'm surprised there haven't been questions around blockchain underneath this. I thought there'd be people who go, blockchain, tell me all the scary things about it. Frankly, we use blockchain as a rail, as a tech underneath that. We don't invest ourselves in blockchain. We use it as a rail in the same way that apps use TCP/IP, and we find it works. I'm a payments guy. It works nicely. That's all I look at. Is it effective? Is it efficient to do that? We're not an investment firm in that side. But maybe that just clarifies anyone who's thinking about how do we use that. Are there other questions? We good for time? Okay. Well, then I want to thank you very much, everybody.